What's up, guys? How is it going? It's MC Fire again, tapping in with another video. This is February the 10th, and we are happy to bring you a Monday video. So let's dive right in. Just so you guys are tracking, um, there is potentially a trade war on the horizon, right? There is a potentially a trade war on the horizon. The new administration has already stated that they plan on putting on tariffs with Canada and potentially Mexico and China. The tariffs that were scheduled for Mexico, I think Mexico has made an agreement with the current administration, and they are the result of that is they're going to put more protection at the border, and because of that protection, there's not going to be they're going to be a temporary pause on the tariffs, right? That's for Mexico. The next thing that potentially is going to happen is I think Canada and the United States, they might go through with tariffs, but it's going to be a tit for tat. If one person raises, the other person raises, and so on and so forth, right? Just to see who's going to capitulate. It's basically a tariff way of playing chicken. This is going to really affect, I believe, Canada way more than the United States. We do get a lot of maple from Canada. Canada is our number one importer of oil. Canada also imports lumber and some other really key items to America. And as a trading partner, we're really essential to Canada in the sense that 90% of their population lives really close to the U.S. border. So just put that into perspective. Most of their population, Canada is a very large nation by landmass, but their population is essentially almost not interdependent, but yeah, I would say interdependent with the United States. So Canada might have to do some soul searching to figure out what they're going to do, but tariffs might be on the horizon for good old Canada. You also got China. Now, some people would say, China gets a like 10% tariff, whereas Mexico and Canada are potentially getting a 25% tariff. Well, some people, when you think about that, it's like, why China gets a 10% tariff? China gets a 10% tariff because the tariffs that that Trump already enacted in his first term, and then Biden carried over, were primarily targeted towards China. So if you think about it, most of their items are already tariffed. So he doesn't have to like go 25, 50%. He could just do a slight tariff just to say, hey, I'm increasing it there because they're already being tariffed. So that's what's going on in the overall global market. As regards to what you guys see here in the front of your charts, which is the sectors, today was a pretty good day in the market. I would say the personal account, hit all time highs. The Q's kind of pushing up there, as you see that red line there. The top red line at the one at the bottom is Influence Tech, making screaming moves to the upside. You also had consumer staples making some progress in industries. Now, if you guys know, um, most of the S&P 500, the other stocks will track. So if you think about the correlation, if the S&P 500 overall is going up, then the overall market is generally up. Now, one thing you did see kind of take a hit is financials. If you've been watching us last week, you know that we made a pretty big play in financials, and financials is the purple line here. I will bring financials to the front of the classroom in info and tech. As well, I'll keep energy and real estate up. I'll get rid of communication services, community materials, get rid of that, and consumer discretionary, get rid of that. These are the ones I want to bring to the front of the classroom. So financials take a hit, but info and tech kind of rose. Now, what does that tell me? That tells me that financials is a little extended. We kind of dived in last week, and we actually took a couple plays, really in the XLF as regards to financials, and made a massive killing. It's one of the plays where my expectation for success was around, I'd say 90%, due to the analysis that we brought down. If you guys want to watch some of those previous videos, we might link that in the description. On one of those videos that we talked about the XLF trade is really when you kind of bring everything together. That's what you get, right? A masterpiece there. But screaming to the upside, info and tech. Shout out to Info and Tech. Shout out to our boy Palantir. We're going to talk about him in a second. Also, you have energy, or excuse me, industrials screaming to the upside. And energy, look at that massive move in industrials going from essentially 3.9% sector to 6.9. And it didn't take that long either. So this Monday was pretty massive in energy. So kind of watch that. That's something that we got to keep our eye on. Coming up here on the Forex Factory, we're looking at news. This week is going to be interesting. Fed Chair Powell testifies tomorrow. Now remember, these things are just so you can kind of watch out. They're the red folders kind of indicate more volatile items. So expect if you're a day trader, kind of expect things to be a little wonky as this thing is going on live or the result of that. Right. Anytime the leader of the free world's economic zone speaks, people then do tend to listen. So that's something that we just got to watch out for. You also have on Wednesday, core PCI. That's pretty, they do that pretty regularly. And then Thursday, core PPI is on Thursday. Now Friday, core retail sales. How's the overall consumer index? How's the consumer doing? Right. But overall, just jam packed this week. But really, the linchpin of this week is the Fed chair speaking tomorrow. So keep that in mind. Okay. Now, Fed Watch. I know we haven't done Fed Watch in a while. I actually need to refresh it. The reason why is because the Fed has already said that they're limiting cutting rates from 4 to 2. And why is that good? Well, that's good because here, let's go this way. March 19th is the next Fed chair meeting. So if they're limiting rates from 4 to 2, that means rates are going to stay higher for longer. Now, they did cut rates a little bit. Now, what does that mean for you? That means that the market can kind of drift higher at what we call failing to the upside, right? If it fails upwards due to inflation, doesn't mean things are getting more productive, even though they are. Productivity over the United States is growing. But when you combine that with the purchase power being eroded and assets disappearing off the market due to people having a wealth disparity or a wealth gap, so to speak, then I mean, what do wealthy people buy? Do they buy more consumer goods, or do they typically, once they get all their consumer goods, go back to buying assets? Typically, wealthy individuals buy assets. So the tax cuts are gonna make those people who buy assets a lot more wealthier and give them a lot more discretionary spending to go ahead and purchase more assets. There's only so many cars you can buy, so many houses you can buy, and so many boats you want to buy before you're just like, let me just spend my money on things that make me more money. So nothing wrong with that. I'm not saying that, but I do know that rates higher for longer gives you an opportunity to go ahead and get in while things are El Cheapo, right? Having said that, there's not too much that's El Cheapo right now, except for things in the market. So this is why I really do like the stock market and making plays and options, because it doesn't equal the playing field, but it gives you a shot at getting out of your position. There's no other opportunity that I've seen that has the ability to kind of make a change in your life on your own times with no other clients. You don't have to learn how to sell or anything like that. You literally just have to learn a skill, right? Tap in, plug in, read the books, follow the mentors, right? Do the things that they do. Find a trading style that works for you. Rehearse it, practice it, and execute it. Right, very simple system. Over here we have an IOU system. No system by any means is 100%, but the reality is you can win, and that's kind of the point. We want you to be able to get a W. So if we're bringing these guys up to the front of the classroom, I'm not sure if you can see that. Let me see if I can change the resolution. I'm gonna see if I can change the resolution. We're gonna see if we can change that resolution for you. I know some people have commented on and said that the my resolution that's set up for my computer is a little too small. So we want to go ahead and do the scale of like 200%. Does that work? It might work, might not. Let's see. Yeah, that worked out a little bit. Okay, cool. I'm gonna say apply. Let's see. Yeah, it worked a little bit. Let me see if I can bump it one more, just a little bit for you guys. Okay, that's actually pretty good. So I hope you guys can see that. It's like a little better resolution wise for you. So yeah, there we go. Sweet. Hope you guys can see that. Now it makes it. I don't know why it's should be fine. Okay, cool. So that should be fine. If it's coming out wonky or it looks weird, just let me know in the comments. I'll be able to change stuff like that. Because on my OBS it looks very interesting. But yeah. So essentially, right, the first thing we're gonna bring to the front of the classroom is some of the things that kind of proves what we're saying, right, in a very weird sense. In a weird sense, you can track the purchasing power of people by the parity of gold to the average to the rest of the market. Gold has been screaming to the upside. Now we do have exposure to gold here, and gold is about to hit relative all-time highs. It did, as of today, scream to the upside and started to pull back, right? It doesn't necessarily mean that gold is one of these things that we're looking to make a major play in. Really, it's gold has been used throughout the annals of time to protect purchasing power in inflationary periods. Why is that important today? Because if gold is screaming to the upside, that tells me that you're either in a recessionary period or you're in an inflationary period, one of the two. Why? Because asset prices typically tend to rise during a recession, and asset prices tend to rise during inflation. Now, one is not necessarily the same cause of the other, right? Um, so, in a recession, asset prices tend to rise. Historically, what most people don't realize is because typically wealth disparity. So, in a recession, the wealthy get extremely wealthy and buy up all the assets, right? And there's no more assets. So essentially, people have to service the needs of people that can pay for those needs. Well, if the only people that can pay for the needs are the extreme wealthy, then those that are left on the sidelines kind of get annexed, right? Laid off, AE recession. And the market kind of, the overall economy kind of slows down. So you need that money circulating to get out of recession. Inflation could be caused by one or two things: an increase in prices due to the gradual decrease of supplies, so the price of rising, the price of goods rising, or the increase in demand, or your purchasing power being eroded. And that's kind of what we've seen here in gold. Your purchasing power is definitely being eroded via the money printer, and gold reflects that. If you look historically, that's typically what happens. So shout out to gold. Looking for a juicy pullback. We've already got some, but we definitely wouldn't mind getting some more gold. Also, to bring in the front of the classroom, PLTR, a couple winners there. Absolutely been an amazing grind up for PLTR. Had it in our portfolio. It's been screaming to the upside here. We like this nice juicy red candle crossing the highs. No need to take any action here, right? It's already pretty extended to the upside. Could it climb for more? Yeah, absolutely it could. But the reality is we're already in considerably at a very, very good price. So being patient, waiting for a pullback. If you missed it, don't worry. There's 4,000 stocks out there. You can catch your play. Just be patient. Telling you it's not worth it chasing stuff like that, because if it pulls back, then you feel like the dodo, and we don't want you to feel like that, right? Protect your emotional integrity at all costs, right? So why am I saying that, right? There is no 100% system. Just because you have an outsized candle in an uptrend that's red doesn't mean that this thing is just going to keep screaming for another $20. It could, but who kind of knows, right? Hindsight is 2020. So you kind of got to be wise and patient with stuff like that. You know what I'm saying? So make sure you just turn up the edge, turn down your feelings on this one. There's not a lot of edge here, and your feelings are going to tell you, hey, this thing could scream to the moon. Well, it might, but it's already at the time to get it. If you're going to pull the trigger, was like back here or on the dip when it moved into the moving average clouds on the weekly. When it's in 3 ATR in the weekly, it's not necessarily the time to pull the trigger. Could it go and kind of do what it did here? Yeah, absolutely. It could let me bring it to the front of the classroom here. Could it too close? Too close. Could it do what it did here, right? Gap and then kind of just run to the upside? Yeah, it could. But that is hindsight. You're looking at it from February the 10th and looking back and saying, see, it did it before. Do you really want to take that chance? Or do you want to just be a professional and get in back here when the trend changed, right? When the trend is going in tight squeeze and start to expand, you can start getting some setups there. That's when you want to be a professional and take the buy. So don't give into FOMO and be that guy that's woulda, shoulda, coulda late. Be that guy that's willing to take the risk to get the reward. That's kind of how we win here. So shout out to Palantir and its move. Shout out to Gold and its move. Moving right along. We're going to go ahead and tap at some of our hot takes. Now, our hot takes, for those who know, is based off our IOU system. You're going to identify the trend using a higher time frame like the weekly. You're going to look for a outsized candle, AEDO in IOU, outsized candle, something that probably is out of place. If you're an uptrend, an outsized candle to the downside kind of sticks out. Then you're going to see you're going to look for a trigger to take that trade. For us, that trigger is crossing above the high of the outsized candle in the reverse of its trend direction. So let me show you what I'm talking about here. The first one we're going to take a look at is let's go link. We're going to go link. We're going to work bottom to top today. Cool. So as you see here on the left-hand side of our chart, that is our weekly chart, and it's currently green, right? Indicated by a green moving average cloud. We like simple systems and we like to keep things super simple. I'm telling you, it's just easier that way. When you get more acute tools and learn how to use them and have good training, then you can make things complicated. But even from what I've seen, the best of the traders, they love simplicity. It's kind of very interesting. So what you see here is now I'm going to bring this green line indicates a trend change positive on the weekly chart. So we're going to jump over on the right-hand side, the daily. We're going to bring it to the front of the classroom. We're going to maximize that here. That green line applies the same here. So what we like to see is, okay, we're in green territory. Awesome. Now we just wait. So you could take this, but I don't necessarily see a reason to take it just because the trend changed. Okay. Now, what I do like is to combine the edge, right? You have the weekly uptrend, and then you have this outsized red candle to the downside. That is very interesting. So now, once it crosses above a high, I can take that potential trade as it's a trigger for me if I still see fit, right? Take that trigger, take the buy, stop out at the low. It does go sideways a little bit, but it doesn't end up expanding. We're kind of looking for the same thing here. If it crosses above $8.89. So $8.89, where would our stop be? Over here, we like to be 2-bar professionals. So you could be at below $6.68, respecting all of our buyers, washing out this candle, or any other candles subsequent that are between our trigger entry and the low here. We're trying to just really respect all of our buyers. So what do I mean by that? There's more, let's say candles start printing at 641 and then $6 on the next 2 days. Let's say after that, there's a push and there's another push. Once it gets above our trigger entry price of $8.89, I would still respect these buyers down here. What does that do? Unfortunately, that does increase the risk and kind of decreases your reward. So it's just something to keep in mind, okay? But your risk is actually defined for us on the buy. So because we take options, we kind of construct the option contracts to benefit us on the buy side of it, and as potentially, hey, if the most I can lose here is well within my risk tolerance. Okay, that's how we kind of manage our risk. The next one, full disclosure, we are already in this one, K-Web to the upside. So if you notice, kind of did the same thing here, and this is a very good illustration of what I'm talking about. K-Web is in an uptrend. Okay, I'm going to go bring it to the front of the classroom. It is in an uptrend. Yes, we have a red moving average cloud, but the problem is what? We default to the 21 period moving average. So if the 21 period moving average is moving up and the 8 period moving average is crossed below that, yes, it's negative, but you can get maybe a slingshot, what I like to call the slingshot effect. As the 8 period moving average catches up with the 21, it does tend to really punch to the upside on a lot of stocks. And you kind of see that here. You got a neutral 21 period moving average. The 8 period moving average dips below that, and as it comes back up, boom, kind of like a beach ball that's inflated, going below the water and popping up for air. You'll see that. So we like what we're seeing here. Nice juicy red candle. I mean, a nice doji red candle right here, and it crosses above with some emphasis as well. So hopefully we get a punch to the upside there. It doesn't look for too much liquidity. We're looking to roll or take it off at the first sign of danger, 34.41, and our stop out was $30.25, kind of at the low, respecting all of our buyers, right? Our entry was this candle right here. So as it broke above that, we took that buy, and then respecting all of our buyers on this candle, respecting all of our buyers this day included, that's our stop. So the risk has been defined. Next up on the list, Givo. Boom. Good old Givo. Very similar story. 21 period moving average is an uptrend. 8 period moving average is below it. Now the problem with Givo is it's kind of neutral, so we're hoping that we can get a play above here. But what I don't like to see is here you have declining highs. So you're making higher lows on major pivots, but here you're making higher lows for the major pivots. So that could be something, right? You could be setting up for some ascending triangle action. That could be pretty nice. But with it making lower highs, it'd be more descending triangle action technically, right? So just keep in mind. So you might be able to take this play with a nice juicy risk to reward here up to maybe the first sign of resistance there. Be good look. We already kind of did something similar here, and then took some off at the first sign of resistance, and it did pull back. So that trade was actually pretty successful. Full disclosure, right? Good old Givo. QEV or EQV, excuse me. So EQV is one of the ones that we threw in the shuffle or in the mix because we're tracking something called autopilot. And if you look at some of the politicians or what they trade, we want to get some new blood, and why not throw some new tickers in there that some of the best traders in the world take, right? Your U.S. politicians that sit on some of these economic committee hearings, right? So we threw one of these in because of that. So just keep that in mind. But yeah, setup is to the upside, right? It hasn't really been established in a very strong weekly uptrend, but I'm just going to go ahead and assume, right, more candles are, scaling upwards, and you've got your moving averages here transposed from the weekly to the daily. So yeah, we're just going to assume it's an uptrend, right? And while it's doing that, setup is at the break of 10.03. So $10.03, potentially take a play to the upside. Now, one of our favorites, BYD DF, is basically BYD company, I guess for the US kind of deal. They're traded, and what we were able to do was we did take a buy, and it has since punched to the upside. Now we did take some off right here, but we're potentially probably going to take a little bit more off as it continues to the upside. So we'll just be taking off some all the way up there, right? But this is what I'm talking about, right? That slingshot effect, right? The 21 period moving average kind of always kind of peels up, and the 8 kind of dips below that. So as it peekaboos back above, and you see our nice juicy setup candle here, I consider this like a slingshot uptrend. Okay. Now there's other factors in play here. It does respect that, and it does respect over here at that 32.08 resistance level. So because it respects that, I felt pretty confident in saying, okay, risk is defined. Let's take a little off here, and now breeze tides. We're going to take a little bit off if it starts to pull back. If it wants to keep running, awesome. We'll just keep moving our alert up, continue to take profits. But shout out to the People's Republic of China and what they've been able to do in the EV market. They are the leaders in the EV market globally, right? Maybe not in the United States. You probably never heard of BYD, but BYD from a superior product standpoint and a superior cost standpoint, pretty much cuts everything out of the water as regards to EVs. From luxury to some of their, I mean, it's amazing what they're able to do with some of their stabilization in creature features inside of the car. Really, really good work for BYD, regardless of how people might feel about the, you know, what's political or otherwise. Then you have, and just kind of to bring up to the front of the classroom, I'm gonna bring up Alibaba, which is a name that most people know, right? So seeing some pretty juicy rallying in China. Now, China has been, um, they brought out the cannons, right? China has started easing a little bit. So, uh, we could see some growth here from some of the big names in China, Baba included. So you're seeing BYD, you're seeing Baba kind of scream to the upside here in this rally. It's kind of what you want to see. Very similar story. Yeah, 21 period moving average moving up, nice slingshot, multiple setup candles here, and then kaboot. It's fires to the upside. So you can kind of throw that in your repertoire. And this is why I say when in doubt, default to the 21 out. When in doubt, 21 out. Okay. If you're ever confused about the uptrend or downtrend, if it has enough power to push the 21 period moving average up or down, respect that. Really respect that. Okay. So in this case, the 21 period moving average, it was pulling back to it and then it slingshots away from it. So shout out to just traditional historical theory, right? Next up, we've got a reversion to the mean. We have a couple of reversions to the mean trades on here. TTWO. So this is kind of what I'm talking about. Like we do have some unorthodox trades that we sometimes take. One that I want to bring to the front of the classroom that we took before, just kind of illustrate, is UNH. Took a reversion to the mean trade on UNH and XLE. As you can see, kind of gets down. This is how the setup works. As things really push, eventually what goes down can continue forever, but it's highly unlikely. Kind of get to 3 times the average range of a weekly play, and then you start seeing setup candles, people getting in here a little late and getting off sides. We went on and took this play with obviously a stop out of the low, but as soon as it gets kind of to the 8 period moving average, that's when we let it go. That's what I found is the 8 period moving average for a very early risk to reward or early warning to make a decision. It's probably your easiest and best bet if you're going to get. Sometimes reversion to the mean trades do not make it back to the 21, but a lot of times they do make it back to the 8 if they've gone a little bit too far away from home. You got wide moving averages. So that kind of is what we're looking for in TTWO. We're looking for that reversion to the mean trade, even to the upside. And if you look over here a little bit, right, you have this green, this red right here, and then it kind of gets off sides. Now it doesn't actually play out that way. Remember, you are bucking the trend. So you're when I say 2 bar professional, when you buck the trend, it's normally that bar is, I respect that bar, right? I do respect all my buyers, but I don't bend or break. I don't bend that rule when going against the trend. I keep that rule pretty tight. So, and over here we like to bend but not break our rules. That's for sure. So TTWO is a reversion to the mean trade. If we get and it's post earnings as well. So but earnings, they crushed earnings, so you got to watch out. Just because it pulls back and it dips below doesn't mean it's just gonna go straight back to the 8. That's the idea, but it might not. So just be cautious there. Set your risk accordingly. COP. So full disclosure, we are in COP to the downside. Now, what we liked about COP is traditional short the rip kind of play here. Already kind of in motion. The rip kind of happened. It did test a 21 period moving average and it's now pulling back. Baby rip right here. Nice juicy outside candle right at earnings, but the very next day crossed below, showing real weakness. So we like that. We went on and just took that play. Now, it did go down considerably again today, but it dojied back up. So that could be a liquidity grab. It could be changing trend. So that's something we're going to watch. Remember, our stop is 2 bars. In this case, we're going to keep it 101.12. That was 101.12. and we're looking to take it off at the first sign of danger as it goes to around 96.41, well below it before it gets to the low. Selling it early is pretty good too, because sometimes you just don't want to be late there. So APD, shout out to APD, right? Uh, looking forward to the upside here. It's in an uptrend. 21 period moving average is moving up. 8 period moving average is tight with it, and we just had earnings. So as it sold off, right? Because earnings was absolutely horrible, which is fine. What we want to see, though, is it cross above these guys that are in a little late. Nice doji there. So if we can get a cross above 311.51, looking to take that trade for sure. I'm going to go ahead and put the green line to indicate that there is a green trend in play for all those who are technocrats. Boom. There you go. So, yes, APD Air Products is looking snazzy. SPGI moving right along. You have SPGI. So nice pullback here. 21 period moving average is moving upwards, right? Or it's neutral, excuse me, but the 8 is moving upwards. So we can get a rally here. Now the only problem I see is you've got this resistance right here. You can almost, I would almost say, it's on the hot take list because of the setup, but I would go ahead and avoid it. You also do have earnings coming up, so it could be a massive explosion to the upside or downside, but I would avoid it because if it runs into resistance, it could just fail as easily as it pushes. So just keep that in mind. Moving right along, MRK, Merrick. Now, we told you guys that there was some negative pressure in Merrick. Indicated by that line before it actually exploded away. We said we potentially could take this for traditional play, and then it just went boom, cannons and confetti here. So we did see it. We did shout it out to you guys. If you took that, awesome. If you didn't, awesome. PC running low on battery. So we're gonna have to wrap this up, guys. We got like 2 more, and then we'll have to cut it short here. So yeah, massive drop here on Merrick, breaking through couple support levels. So keep that in mind. Plays already happened. You could potentially say reversion to the mean here for Merrick if you get across above those that are coming in a little late. That's what I would do. DHR, okay, before the computer dies here. A little bit of the same, hitting 3 ATR here, potential for reversion to the mean, pull it off of the 8 peer moving average, and be a 1 bar professional for DHR, right? Shout out to DHR. And last but not least, TMO. So you got TMO present. For TMO, we're looking for a potential play to the upside. Now I do kind of have a 21 peer moving average going down, so I'm gonna have to revise that, right? When in doubt, 21 out. And if you're just super confused on it, just don't even worry about it. So we're gonna cancel these 2 alerts there. But I appreciate you guys tapping in with us, like you guys saw. I got a low battery, so we're gonna have to cut this one pretty short. But you guys literally got all the hot takes. So thank you guys for tapping in with us, and we'll probably link that video in on the screen to the left or the right, wherever it appears, for the breakdown of the one that we were talked about earlier. You guys have an awesome day. Take care. Bye bye.